Join me as I dive into the Fngr stock lot test and see if I can decode what it's really telling us. The Fngr stock lot test has been making waves in the investment community, and for good reason. It's a tool designed to gauge the performance and potential of certain stocks, but like any tool, its results can be tricky to interpret. Understanding what the test really says about a stock can make all the difference in making informed investment decisions. One of the biggest challenges investors face is making sense of the test results. It's easy to get caught up in the numbers and overlook what they truly mean. Without a solid grasp of the methodology behind the test, it's like trying to read a map without a key. You might get a general idea of where things are, but you'll likely end up lost. The potential for misinterpretation is huge, and that's where a lot of investors go wrong. Misinterpretation can lead to poor investment choices, and that's something no investor wants. It's not just about avoiding losses, it's also about spotting opportunities. When you're misreading the test results, you might miss out on stocks that have real potential. And let's not forget, the stock market can be unpredictable enough without adding confusion to the mix. So, what do investors need to do? They need to dig deeper, to really understand the ins and outs of the Fngr stock lot test. This means looking beyond the surface level and getting into the nitty-gritty of how the test works and what it's designed to reveal. The Fngr stock lot test works by analyzing a variety of factors that influence stock performance. It looks at historical data, market trends, and other critical indicators to give a snapshot of where a stock stands. The goal is to provide investors with a clearer picture of a stock's potential, helping them make more informed decisions. But, how does it actually work? It uses complex algorithms to sift through vast amounts of data, identifying patterns and trends that might not be immediately obvious. This isn't just about crunching numbers, it's about interpreting them in the context of the market. It's a sophisticated process, but one that's necessary for getting a true read on a stock's performance. The methodology aims to reveal not just how a stock has performed, but also how it might perform in the future. This predictive aspect is what makes the Fngr stock lot test so valuable. By understanding these predictions, investors can better position themselves in the market. Of course, no tool is perfect, and the Fngr stock lot test has its limitations. But, when used correctly, it can be a powerful ally in the quest for investment success. The latest results from the Fngr stock lot test are in, and there are some key takeaways that investors should pay attention to. First, it's clear that certain sectors are outperforming others, a trend that's likely to continue. This information can help investors make strategic decisions about where to put their money. Another critical finding is the emergence of new stocks on the radar. These are stocks that the test is indicating have significant growth potential. For investors looking to diversify or find the next big thing, these findings are invaluable. The test also highlights stocks that are not performing as well as expected. This isn't just about avoiding losers, it's about understanding why certain stocks are underperforming and whether there's potential for turnaround. Lastly, the results point to a few market trends that are shaping up to be significant. From shifts in consumer behavior to technological advancements, these trends are what will drive stock performance in the coming months. In wrapping up, the Fngr stock lot test offers valuable insights for anyone looking to navigate the stock market effectively. It's not a magic bullet, but rather a tool that, when understood and used properly, can significantly enhance investment strategies. If you've got opinions on the Fngr stock lot test or have experiences with stock analysis, I'd love to hear from you. Drop your thoughts in the comments below. And, if you're interested in more insights on stock analysis, be sure to check out our next video where we dive even deeper into decoding market trends.